Happy Monday afternoon, everybody, and thanks for jumping in on this feed. I'm just going to have a little chat with y'all about mortgage rates and rule changes and a whole bunch of other things affecting the real estate market here in Ontario. I am Tony, the Geeky agent from RE/MAX here in Hamilton, Ontario, actually in Binbrook, just in the southeast corner of the city. Thank you for jumping on this feed. I see there's quite a few people here. I am going to look down every so often as I just check my phone. If you do have any questions or comments, please feel free to leave them below. There is a slight delay in the feed, so you're getting this feed maybe about 10-15 seconds after it's actually being streamed. So there might be a slight delay in answering questions and that sort of thing, but feel free to put them down below. Private message me, whatever you like, and I'll see what I can do to answer them for you. It's a gloomy day here in Binbrook. It's rainy and stuff after a very sunny, hot weekend. We did have some summer weather for that last little weekend there, and I think we're starting to move into the fall weather for this week and getting ready for Thanksgiving in a few weeks and a whole bunch of other stuff, Halloween eventually and that sort of thing. But we're here to talk about real estate, so let's get to it. We did have an office meeting this morning at RE/MAX Escarpment. If you're watching my feed, I did post a photo from there where we talked about a number of things, one of them being changes to mortgage rules and rate hikes that happened over the summer. So essentially, what's happening here in Ontario is very similar to what's happened in British Columbia probably about a year ago. If you've watched one of my previous videos, we did discuss some rule changes to mortgages back in May, June, that kind of thing. So they introduced a number of changes to the mortgage rules back then that mainly affected insured mortgages. So those are mortgages that are getting insurance from either CMHC or Genworth or a third-party company like that. It's essentially government-backed mortgages, and that's mainly for people who are putting less than 20% down payment on their homes here in Ontario. So if you're putting less than 20% down on your homes, you're a very high ratio mortgage. You've got a big amount owing and a very small down payment. So 5%, 10%, and 90% owing. So you're a high ratio mortgage. And they introduced a number of rules at that time, including a foreign buyer tax, which they did in Vancouver as well. So what happened then after they introduced these rules, including people who have these insured mortgages had to qualify at a higher rate. So even though you were getting, say, a mortgage at 2%, 2.2, 2.3%, you had to qualify for that mortgage at 3.5% to 4%. So if you couldn't afford the mortgage at that percentage rate, you didn't get your mortgage, even though eventually the bank would charge you less money. What happened after that is they also introduced a foreign buyer tax. So it's an additional 15% tax on foreign buyers, that's non-Canadian resident buyers, who are purchasing homes in the Golden Horseshoe area, with the idea being that presumably the foreign buyers were exacerbating the market and greatly inflating prices in the area, and therefore they wanted to kind of put the brakes on that sort of thing. What happened here in Ontario is basically what happened in Vancouver. What I posted at that time is the day before the Ontario government made those announcements. The day before that, in the Vancouver Sun, they also posted that although the markets did calm down immediately after the announcements in Vancouver, they were back up to where they were a year prior. And recently we've seen some news articles coming out of Vancouver saying basically the markets are on fire again out west, mainly driven by consumer demand. So the impact of the foreign buyer tax really was short-lived, and it was more of a psychological impact. I think it scared a lot of people, which is kind of what happened here in Ontario as well. We saw in Hamilton a normal slowdown in our market. As I've shown in previous videos, I've shown some stats where in the Hamilton market, we are busiest in that end of April, beginning of May period. That is our sales peak for the entire year. There's a second peak coming up soon, which we'll talk about, but that is mainly our peak. And then if you look every year for the last 3 years in the Hamilton market, sales numbers in general decline anywhere from 20 to 21.5%. So going from June to July, the actual number of sales decreased by that margin, and the average price goes down by about 4%. This has been happening every year for the past 3 years, so it's nothing new. The greater impact was felt in the Toronto area. In Toronto, the markets, the prices were much higher. We had a huge peak in April and May, which came down drastically as well. So those are record-setting numbers in Toronto. So you kind of expected that that couldn't be sustained long-term. Having said that, the market hasn't crashed. We are, if anything, seeing a slowdown in the market, which we expected over the summer. It was more drastic in the Toronto area for sure, and depending on which parts of Toronto you were in as well. It's all very neighborhood specific, and if you're looking in the greater Toronto area, if you're looking in Vaughan and Markham and Etobicoke, Mississauga, those are very different markets, and they're all impacted differently. So I'd like to kind of stay in touch with my RE/MAX colleagues in those areas just to see what's going on. And they're reporting sort of the same things that we're seeing here in Hamilton. So in Hamilton, when you're approaching September, mid-September to early October, that's the second peak of the year. So basically, during the summer, as we've mentioned before, people, including real estate agents, like to go on vacation in the summer, go away with their families. I myself kind of slowed down the last 2 weeks of August and spent a lot of time with my two sons all around here in Hamilton, and actually enjoying the city and enjoying Toronto, going up to Fan Expo and attending a bunch of different events with them. And then kids are back in school, so we're back at work, and that includes real estate agents. So within the past week or so, and I discussed this with a number of my colleagues at the meeting, and the general sense seemed to be that the market is picking up again. Everybody is getting phone calls, the buyers are ready to buy again, and more listings are coming. I myself have 2 listings coming up by the end of the month, which I haven't had any for the last little while because it's been a little bit quiet. So we're getting 2 more listings coming up, and a number of buyers who were kind of taking it easy for the last little while are now ready to go again. So we're seeing this right across the city. The new mortgage rules that they are proposing to put in place, and looks like they will be putting in place, is expanding that stress test to include non-insured mortgages. So right now, as I mentioned, if you are below that 20% threshold as for a down payment and you're getting an insured mortgage through CMHC or something like that, this is something that the banks do and other lenders do. So it's not something that you personally apply for. So if you're applying for a mortgage at, say, RBC or CIBC, and you're putting on less than 20%, they will automatically go to seek insurance from the government, just as an insurance by the government in case you happen to default on your mortgage. So now what they're trying to do is extend that to people who have more than 20% down. So those are the non-insured mortgages. Those mortgages just get on your own because you have a significant enough down payment. It's 20% or greater. They consider those to be less risk. Those are low ratio mortgages because you have a higher down payment, and so they don't necessarily seek insurance. The other portion of the market is homes over $1 million because CMHC does not extend insurance to any values over $1 million. So again, that's a non-insured portion of the market. And if you're in the GTA, home prices over $1 million are not that uncommon anymore. It's starting to happen here in Hamilton as well. Sort of right now, you can see a lot of home prices in the $750,000 to $850,000, $900,000 range, but that is increasing. So a greater portion of our housing stock is moving into that above $1 million price range, and therefore won't be eligible for the portion above $1 million. So they won't be eligible to get insurance on that portion. So the government is now proposing through OSFI, which is a funny acronym. I can hardly ever say it. It's OSFI. It's the Office of the Superintendent of Financial Institutions, OSFI, OSFI. So now that we're going to require these stress tests for people who have non-insured mortgages in an attempt to further slow down the supposedly on-fire housing market. In addition to that, we've seen 2 rate hikes so far. The GDP, the overall GDP of the country is improving. We are now officially in a post-recession economy for about the last 6 months or so to a year. So we're not considered to be beyond that recession that was caused by the 2008 housing collapse in the United States. So we're now into a regular economy, a regular market. So interest rates are starting to move upwards into more traditional levels. So right now we're above the 3% mark. The average posted rate is somewhere around 4.64 if you're looking at the big 5 banks. And we're just starting to creep up. Now, we've had 2 mortgage rate increases already. We are potentially expecting a 3rd in October or November. We're going to have to wait and see what the Bank of Canada announcement is at that point and see how the how the markets in the U.S. are as well, because that's also something that greatly influences where interest rates here in Canada are, at least as far as mortgages are concerned. So all these things combined are trying to kill it and make sure that it's dead in terms of the housing market. I don't understand generally what the philosophy is. I mean, I get it. I think there's a much ado about nothing, really, in a lot of cases. The markets are getting overheated. They're trying to be more prudent in terms of protecting themselves as far as the insured mortgages go, and that I understand, because at that point it's government and it's taxpayer money that's on the line backing these mortgages. So if they want to be more prudent in that regard, I'm 100% for that, to make sure that if people do default, that it doesn't cause some issues in that regard. Now, if on the non-insured mortgages, introducing the stress test there is, again, just an attempt to control the market at that point. And Paul's leaving already. Hey, see you later, Paul. So is this intervention really needed at this point? It doesn't seem to be. It seems like the market at this point is actually coming back. So the initial injection of these new rules back in May by the provincial government really haven't had the impact that they wanted them to have. Again, I think it was really mostly, and from the people I'm talking to all across the country really, but specifically in the GTA and out in the Vancouver area where these tactics have been applied previously, it seems like the market's coming back. I mean, just anecdotally speaking, at the meeting today, we had reports of offers coming in, like 14 offers being submitted on a property over the weekend, which is something we haven't seen for about the last month and a half to 2 months. A lot of the competition has sort of drained away from the Hamilton market, but things are getting busier, so we're starting to see that kind of thing again, and we're probably moving in, at least for the next little month or so, into the area where fairly desirable properties will be holding off on offers over the weekend to try and generate competition, try and generate bidding wars and that sort of thing to maximize the seller's return on their investment on their home. Then we'll probably cool off again. December is the lowest point for sales for us. So that's probably the time when it's actually probably the best idea to buy, because there won't be as much competition in terms of buyers, but that is the low point. So once we get past this peak coming into mid-September, beginning of October, we expect things to cool off a little bit again. Whether they'll drop down as low as they were last December, we're not really sure. Time will tell with any of these kind of things. But we do expect them to cool off over the Christmas season. Basically, once Halloween is over, we get into November. Depending what the weather is like, if the weather holds up and we don't get as heavy snowfalls as we have many years ago, it seems like, because the last few years have been fairly light in terms of snowfall in the Hamilton area, which has helped the market just kind of continue right through the Christmas season. But generally speaking, families are off at Christmas time. Schools are out, at least the public elementary schools are out for a few weeks over the Christmas period. People are on holidays. They really don't want to be out looking for houses now. Having said that, people who are out are serious. They really need to buy a house. They're not just out window shopping and that sort of thing. So it's actually a really good time to buy for buyers, because they're not competing with a lot of other buyers, but also to sell, because at least the people who are out there are serious and are willing to negotiate. So you wouldn't really use the tactics that you would during a very competitive seller's market by pricing low and hoping to create competition and selling for more than asking price. What you'd probably be doing is just pricing reasonably where you want it to be, and most likely expecting to negotiate to some extent with buyers who are coming up. You can expect buyers to start inserting things like home inspection and financing conditions, possibly even a sale of property condition in as well. Things that didn't completely go away during the hotter markets, but were greatly reduced, to say the least. So that's kind of where we're at right now. Will these rate hikes and that have any effect long term? Most likely. But in areas like Hamilton, where we're continuing to grow, where our income growth over the past couple of years has exceeded the national average, I don't know really is what's happening. It really depends on a lot of factors. As long as our infrastructure continues to be improved, which it looks like we're doing, as long as businesses seem to relocate here, which is part of our bid to get Amazon to come and relocate here, which would bring upwards of supposedly 40 to 50,000 new jobs to the area, including, or in addition to, upwards of $5 billion in investments in building in the area. All of these kind of little factors will play in long term, but the Toronto and Hamilton markets generally look pretty healthy. It's generally where people tend to gravitate to in the province, and in Hamilton especially, we get sort of the spillover from Toronto. People who can't quite afford the prices in Toronto look to places like Burlington and Hamilton and Grimsby and all the way down the QEW towards Niagara. So this is the area that we service. So the increase in mortgage rates doesn't have quite as much of an impact in Hamilton as it does in other areas, mainly because we're just sort of the refuge for people who can't afford Toronto prices. That's where we're at. I'm just having a quick look. I don't see a lot of questions being popped up there. I see a whole bunch of people watching, which is always nice. Thank you all for tuning in. Rose, hi Tony, thanks for sharing your insight. Anytime, Rose, thank you. I wish I could have helped you with that Sudbury referral you were looking for, but top of my head I couldn't think of anybody. But yeah, we've got a whole bunch of people chiming in here. No questions being asked. If you do have any questions, please feel free to post them below. I do follow up and look afterwards. If you need to reach me, this is who I am. I am the Geeky Agent at Remax. This has been Remax Geek TV. I'm glad you all tuned in, like I mentioned. If you want to look for a home here in Hamilton, please visit my new websites. You can find me at hamiltonlifestylesearch.com or lifestylehamilton.com. Either one will take you to our new website. From there, you'll be able to search for a home pretty much anywhere, but primarily in Hamilton. That's where I work, so that's where I can help you the most. You can have a look there. You can log in and register. And once you do that, you can save your searches. You can search for a house based on the school district you want to be in. You can search for a home based on the commute time to work you want to be located in. So you can say, I work at a specific address, and then say, I don't want to live any more than a 45-minute commute to work. And it will only select properties within the radius that you're looking for. Or you can further refine it by naming a city, such as Hamilton, and it will only pop up the homes that are within that 45-minute commute time to work, which is great. Again, you can choose school districts as well to limit your search to find houses there. If you do have any additional questions once we're done, you can always reach me by text or phone. You can get me at 289-237-9896. Please feel free to drop me an email if you like at tony@thegeekyagent.com, and feel free to follow along. I am online pretty much everywhere. You can find me on YouTube, Twitter, Instagram, Facebook, Snapchat, all at The Geeky Agent, or look me up at Tony Iacoviello. Also on LinkedIn, at Tony Iacoviello as well. I do post the occasional video and listings there for your enjoyment, really. And again, that's pretty much it for me today. Nice and quick one, I hope. Hope I didn't talk too much. Hope I didn't bore you. Hope I informed you just a little bit more onto what's happening here in the Hamilton market. Again, any questions, please feel free to forward them on to me. And as always, thank you for tuning in. I really do appreciate it. And again, as always, I'll talk to you soon. Have a great day.